Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday market webcast. Okay, we talked about resolution. We've talked about upper band rides. It's basically one big rinse and repeat move to the upside day after day after day. You can be long or you can lose money. It's totally up to you. We have been picking our spots on the short side in the room and using them as dip buys, as vehicles to get long. And then once you are long and things die out and they bore the hell out of you, you've really just got to, you got to be in. We're paid with a free ride, and you just have to wait. You have to wait. This is one of these tapes where if you're running around doing too much, you're going to cut yourself up, because the pauses between the moves are, they're long, they're choppy, and they're really boring. But fading a move out of boredom in this market will really get you. It'll really get you torn up if you let it. So the upper band ride continues. The bands are expanding a little bit. It's just been this slow march. 6 sessions going on 7. 41.02 half is your high of the moment. So this, these little rinse and repeat actions. We had the consolidation early week. And it's here, then it's boring, then it's here, then it's boring. It's just these little small, taking the stairs up and up and up. And it's very easy to fall into the trap of, 40.76. I mean, how high is this thing going to go? 40.92. I mean, come on. And you can do some trades to the short side, but you have to understand when things start to not work out, when that hourly midman goes support, that as counterintuitive as it may be in your mind because of A, B, C, and D, and this is why the market should go down, you just have to buy it. There's nothing, there's nothing artistic or whatever about it. The trend is to the upside, and when things stop going down, you need to get long. And we haven't put together a huge week this week, but we've been consistently profitable, picking our spots on the short side and then finding our way into the long moves that keep heading up to all-time highs. So we ended up long yesterday morning, afternoon, midday, in 79, 80, 81 area, and the thing settled in the 90s, and we just kind of sat there, and we waited, and we took our profits, and we ended up taking runners off for 10 handles overnight, and we're flat now. I don't really want a whole hell of a lot to do with it right now. We're set up for another pretty indecisive morning, in my opinion. So the last 3, 6, 8 hours worth of candles there has been on either side of the hourly mid-band. And you can see the bands kind of starting to tighten up again. So we may be in for some more consolidation and then another decision. Whether that's up or down, I don't care. But just understand that the trend is up, that if these resolutions are to the downside, you can be there for a trade, but that trade has to perform. So, and you have to take profits along the way, and you have to respect what price is actually doing, not what you would like price to do. You have to respect what price is actually doing, not what you would like price to do. Price doesn't care what you want it to do. It doesn't care what I want it to do. It doesn't care. It's price. Stick to what's on the chart. Get out of your head, get on the chart, focus on price. So you've got hourly midband 93, proprietary moving average is also basically 93, 93.25. Volume weighted average price 94, 5-minute midband 94, daily pivot 89 and change. So 89 to 94 is going to be an area that has to get resolved. Kind of like 80 to 84 yesterday. You win that chunk of price. Then for the bulls, you got to take it up over the top again. and you want to do what we call in the room, they need to have some, Friday happy fun time where it's Friday and it's the afternoon and they just squeeze the bears and do their thing. If that happens, you can end up considerably higher than 4102.5. If you're the bears, it all starts with converting that area, 90 to 94. Then you've got to get back down into the lows from yesterday. So you've got this 4073 print here, 4072.5 from early Globex. You need to break that area. In fact, you need to close below it. If you do that, at least it'll be on the minds of the market Sunday into Monday that maybe, just maybe, we need to take a break now that we printed 4100 and change. But until then, and I continue to say, you're 9 days down here at 4039.94 until the bears can convert on a closing basis that line and keep it converted, then, shorts are a trade, dips are a buy, and we're just going to keep doing our thing. That's the reality of price. You have to be realistic about price. All right. Everybody have a fantastic day, fantastic weekend. Be safe, be healthy, take care, trade them well. Come check out the room. I'll talk to you Monday. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.